Hi all. I thought of throwing to a couple of points in relation to working from home or home office expenses in your tax claim. There are a couple of ways you can claim your home office expenses or working from home expenses. Um, the first method is 52 cents per hour method. Uh, this method was traditionally using for several years now. Um, with this method, you can claim 52 cents per every single hour you work from home. Say a week you work 40 hours from home, so you multiply 40 hours with 52 cents, which is $20.80. um, the things which covers in 52 cents are your electricity bill, the furnitures you purchase, which and any cleaning expenses. So once you claim this, you cannot claim your electricity bill again. You cannot claim the furnitures you purchase, your table, your chair, and things for your home offices. Um, and you cannot claim if you have any commercial cleaning services for your office. But you still can claim on top of the 52 cents per hour, you still can claim your internet bill, your mobile phone bill, purchase of your computer, laptop, your printer, cartridges, papers, any stationery expenses. So what any expense, basically any home office expenses apart from electricity, furniture, and cleaning, you can claim on top of 52 cents per hour. So basically, you're claiming 52 cents per hour for every single hour you claim, hour you work, plus all the stationery, computer, internet, and mobile phones you still can claim. Um, One of the conditions to claim 52 cents per hour method is you have to have a dedicated home office space at your home. You cannot work from your lunch room. You cannot work from your dining table. You have to have a home office setup. This method is introduced specifically to cover the COVID-19 lockdown situation. Um, with the 80 cents, as the name says, you can claim 80 cents per hour for every single hour you work from your home. Um, Very similar to the 52 cents method, but here you claim 80 cents instead of 52 cents. Say, for example, you work 40 hours a week from your home. You claim 40 hours, 40 multiplied by 80 cents, which is $32. Um, the things which covers in 80 cents per hour method is pretty much everything. All your home office expenses must be included in this 80 cents method, which means you cannot claim any stationery expenses, any telephone expenses, any internet, printer, cartridges, or paper, or any other expenses, including your mobile phone expenses. If you've been using a lot of your mobile phone, your personal phone, for work related purpose, you still can't claim it if you've been using 80 cents per hour method. um, 80 cents per hour method probably not beneficial for people with a lot of internet and mobile phone expenses. And if you have to print a lot from home, you have to use your home, you have to purchase a printer, you have to purchase cartridges and other stationery items as part of running a home office. Also, again, mobile phone is very important. If you've been using your mobile phone for work purpose a lot, then 80 cents per hour probably not beneficial for you, because you cannot claim your mobile phone expenses with this method. It's a simple method. 80 cents is an easy and uh, very straightforward method. You basically just multiply your hours with 80 cents, and that's it. You cannot claim anything more, anything less. You are done. Another thing with 80 cents per hour method is you do not need a dedicated home office. You can work from your launch sofa. You can work from your dining table. You can work from anywhere else at home along with your family members. But but you still, at your request, for either method, either 52 or 80 cents per method, you still have to keep a diary for 4 weeks. You don't have to keep during the whole time you've been working from home. For example, there are a lot of people working the entire financial year from home. You do not have to keep a diary for the whole year, but you have to keep a diary for 4 weeks just to see the pattern. If the pattern is same for the entire year, you just keep it for 4 weeks, and that's enough, because it's almost like a logbook for a motor vehicle, but you only have to keep 4 weeks. Then you can use the same pattern for the rest of the year. We usually get a lot of questions in relation to claiming rental expenses. If you've been renting the property, can I claim my rent? Or if you're owning the property, can I claim the mortgage interest, the council rates, the water bill, and all other running expenses of the house? Um, Majority of the situations you cannot claim the occupancy expenses. The only situation you can claim occupancy expenses, which is your mortgage interest, which your council rates, electricity bill, sorry, not electricity bill, the water bills, and if you're renting the property, rent, is if you originally operating your business from home, which means if the house has to be your primary place of business, not a temporary but a permanent place of business. Say, for example, if you're a lawyer operating your business primarily from your home, you convert one of your rooms into an office, and you got your clients coming in and see you, and you don't have any other offices outside your house. Yes, you can. Another example is, for example, you're running a hair salon out of your garage, and obviously you don't have other offices outside, but you running your salon from your garage. Yes, you can claim occupancy expenses. In other cases, you cannot. But you should understand that if you claim occupancy expenses for such reasons, um, when you sell the property, if you own the home, if you own the house, and when you sell the property, there will be a capital gain implications when you claim occupancy expenses as part of your job or business. So, for example, if you're running your office from basically from home, and you've been claiming that, and say 20% of your house has been used for commercial purposes, and you've been claiming that expenses during the tax. When you sell your house, the 20% of the 20% of the selling cost or the profit you made from the house comes under the capital gain implications. 20% of your house comes under the capital gains rule. So even though the house is your family home, it's your principal place of residence, but it's not completely tax free, because you have used the house for income producing purpose, income generating purpose. So 20%, whatever the person you use for income generating purpose, that portions comes under the capital gain tax, and you have to pay capital gain tax for that portion. So you have to think again whether you wanted to claim occupancy expenses or not. Another thing about law and middle income offset, that 1080 everyone talks about. This has been introduced in financial year 2019, and it's still there on 2020, 2021, and 22. So 1080 middle income tax offset will be there for 4 years, starting from 2019, and going to be finished this financial year, which is 2022. 1080 is a middle income offset. It starts from the beginning, regardless your whatever the income you are, you'll get $255 from the beginning. Once your income reaches 48,000, you will get a full 1080 until your income reaches 90,000. So if your income is anywhere between 48 and 90, you get a full offset of 1080. Um, that doesn't mean you won't get anything if your income is less than 48,000 or more than 90,000. If your income is less than 48,000, you still get an offset, which is called low income offset and a portion of middle income offset. So um, to make it simple, I don't want to go into detail because the bit of complex calculation there. Regardless what, if your income starts from 18,200, that's what the tax free threshold is. Until 18,200 is tax free threshold. So if your income starts anywhere between 18,200 and 48,000, you still get about $1,000 offset. Put it that way. That's including two different offset. One is low income offset, another one is middle income offset. So from 48,000 until 90, you get a full 1080. So before that, you get about $1,000. Above 48,000, you get full 1,080. Once you cross 90,000, that's what the problem is. Once you cross the 90,000, this 1080 offset bill started reducing by 3%. So every single dollar you get, your offset will reduce by 3%. So once your income reach 100,000, which is 10,000 more than 90,000, so 3% of $10,000 will be get reduced, which is $300 will get reduced from your offset. So if your offset, the original offset is 1080. Once your income reach 100,000, $300 will be taken off from your offset. So the offset you're gonna get is 780 dollars. Then it's keep reducing until your income reaches 126,000. So once you reach 126,000, your offsets will end there. You won't get any more offsets once you cross 126,000. So that's all about that middle income offset. I hope this helps. That's all for now, and I'll see you next time.